on the facts, it seems like China would not be labeled a currency manipulator. What does it mean for dollar yuan?
Well, look, if this is a very asymmetric bet, I think the market firmly believes that the last report is the same as we're going to get, this time around. China is not a manipulator. If we somehow get China being labeled a manipulator, the goalposts have moved dramatically. And if the goalposts have moved dramatically, it's probably for political reasons. And if it's for political reasons, then I think the market's going to say, oh, well, this is all just part of the whole trade war side of things. That's, more pressure on China, etc. Normally, the US is obviously trying to place pressure on dollar China to go down, but perversely, it'll probably go up, really. It will certainly go up on a multi-day basis.
So, what is the longer-term effect of that? I mean, we make a lot of hay out of the tick data. I love the tick data. So you see 3 months of China, quote-unquote, selling treasuries. First of all, is that an indicator of anything? And second of all, how does that play out?
No, it's not an indicator of anything, which is why, why get embroiled in the politics of this anyway, really. All it's going to do really is have China under review, where the US Treasury will take a closer look at China's foreign exchange practices, which they're doing anyway, really. So, that's why I think this is really all, there's a noise, really, a noise factor.
But it does seem that we have to recalibrate to a world where 7 might not be the line in the sand for dollar yuan. I mean, if we go past that, is that permanent, and kind of what does that do to the global economy?
Yeah, I think too much is made of 7, really, yeah? I mean, I think the Chinese look like they're interested in protecting levels around, just shy of 7. I think this is much about the speed of the recent move as it is about 7 per se. I think if we have this ongoing pressure in terms of relative monetary policy, whereby China's having some pressure to effectively ease policy because the economy is slowing, and the US continues with its tightening, then that relative monetary policy is going to be a key driver that will drive a dollar China above 7, regardless really of the trade situation.
What are the chances that we see China in a current account deficit? Are they higher now than they were 6 months ago?
Yeah, no, I certainly think there's a decent probability that if you say took a 2 or 3 year view, that the current account will be in deficit. We're going to have to see how this all plays out as well. I mean, they could have quite a big shift just on the bilateral trade vis-a-vis the US. Not going to be easily achieved, even with all the pressures that you have. But we're close enough to 0 already that negative could be perfectly plausible.
So how much of a problem does President Xi have with trying to deleverage at the same time he's trying to liberalize to combat a trade problem? He's sort of caught between 2 opposing forces, isn't he?
Yeah, I think there's some problems here, in part because you've had a message of deleveraging, and now you've had a lot of these liquidity measures. We've actually just had Chinese money supply growth that came out last night, where the money supply and all the liquidity measures have collapsed, certainly on a year-on-year basis. And that's, I think, portended a lot of the slowing. And now we slow too much. And now, effectively, the orders have to come from above, re-leverage. And that's not going to be easily done, really, because you've actually just, flicked the switch one way, now you're trying to flick the switch the other way. So I think that's where the tension really lies, really, with respect to China, that you've told loan officers, don't lend, and now you're telling them, please lend, really.